Hello everyone. So Zomato has declared their Q2 results of the current financial year, and a lot of new things have been declared by the management in the results. So we'll take a detailed analysis at how the results have been and also understand what the management expects for the business in the future. Alright, so let's start. If you talk about the revenue first, Zomato has reported a revenue of 430 crores this quarter. This number was 360 crores last quarter, which would mean an upside of 23% on a quarter-on-quarter basis. If you look at year-on-year growth, the revenue last year was 190 crores. So there has been a jump of more than 100% on a year-on-year basis. Now this is as far as the revenue is concerned. Now everyone knows that Zomato is a loss-making company. So let us take a look whether the loss actually widened or did it narrow. So this particular quarter, their losses actually spiraled up to 1420 crores from a number of 1160 crores last quarter. If you take a look at previous year similar quarter, that number was only 580 crores. So while the revenue is increasing, one should also bear in mind that the losses have also spiraled up. Now the management has been extremely transparent on why the losses have gone up. One, the marketing costs have gone up. Two, additional costs in expansion in smaller geographies, and three is the additional delivery cost due to higher fuel cost. Now these are the broad reasons why the losses for Zomato have spiraled up. Now let us talk about the long-term view of the business by the management, because ultimately that is what's going to drive the future growth of the business. The first point that the management has raised is brutal prioritization, which means they are going to prioritize the businesses that are core to them, that are performing well, and they are going to shut down or divest the businesses that are not doing well. In that regard, they have a business called Fitso by Zomato, which engages in sports activities, and they are selling that business to CureFit for $50 million. Now that shows us that they are willing to prioritize the high earning businesses for them and shut down the others. The second point is they are going to invest more in their core businesses and the entire ecosystem around it. So they've already told that the restaurant system, the dining system, the food delivery system are very core to them, and that is what their long-term objective is also going to be. The third point that they've raised is they're going to build a hyper-local e-commerce system. Now Zomato's management is extremely bullish on the hyper-local delivery space. By hyperlocal, I mean that the delivery will take place within several minutes or maybe a couple of hours. This is where Zomato thinks that they can even venture into categories that go beyond food. And if that happens, it's going to have a huge compounding effect on their income statement, because this is a space that a lot of investors are also putting their money on. Alright, this was my analysis on the Zomato Q2 results. While the revenue and the losses both went up, the major highlight from the results were the 3 points that Zomato has laid out for its long-term strategy for their business. Alright, that's it from my end. I hope you liked the content. Do subscribe to Finance Lens for more of such content, and I'll see you the next time.